Hey traders, this is Christian from Hertz Tribeca Trade Group, and this is your weekend video. So, just a quick recap of last week, and I think you pretty much know, but these are the raw numbers of last week. You had the SPY down 5.9%. You had the Qs down 7.3%. You also had a lot of international carnage last week. EEM was down 4.7%. And there was a little bit of a flight to safety. Bonds were up for the week, and gold was up 2.4% last week. And we could go through a little bit of sector performance, but that's more of the same. You could see it was pretty, if I could get there, pretty widespread damage. The only thing that was up last week were the oil and gas explorers and producers ETF. That was in positive territory as oil rallied last week, and the gold miners, which again, pretty much risk off there. A couple other areas that did okay. The aerospace and defense were only down 1.7%. I'm going to go over a couple of those names. I thought that was an interesting area to go through. And then on the worst performing groups, you could just see just a lot of, I'll use the same word, carnage. You had the regional banks down almost 8%, along with metals and mining. Chinese internet names, just a lot of areas that on the equity front that got hit pretty hard, and not a lot of areas to kind of hide out in. Last week, you could see the internet names were down 7%. Even healthcare was down 6.7%, which is normally a defensive type area to be in. The semis were down 6.6% as well. In terms of international, kind of the same story there. Very little areas in positive territory. Saudi Arabia, which I actually had a chart on Saudi Arabia out last weekend. There was a lot of inflows, so that was positive for the week. But again, see things like China, South Korea, a lot of emerging markets, a lot of international developed markets that were also down quite a bit last week as well. The financials there were followed suit and were down about almost 5% last week. Okay, so that's pretty much a recap of last week. I'm going to go through a little bit of the sector map as well, but I think what everybody's talking about is the retest. So, of course, I think I have to address that. We're back to the 200-day moving average. We're a little bit higher than where we were, when we kind of went to the lows back on the on what is this, the 5th and the 9th of February. So I think a lot of people were kind of calling for this or looking for a retest back to those levels, or at least back to the 200-day moving average, where we found some support. So, we're just going to have to see it. This video is going out a little bit later than normal, so we might actually see where futures open up here in about 12 minutes. But so there's a couple things to take away from this. We're getting to the area of oversold. Could we get more oversold? Sure, that could definitely take place. We could explore those levels down here. It's really tough to say how much further carnage that we're going to get next week. And I think people are a little bit worried about how money's going to shake out. IWM small caps were holding up a little bit better in the beginning of the week, but then they succumbed on Thursday and Friday. And like I mentioned, the Qs, they also have a ways to go. They did just break that March value area and could be headed down to this 200-day moving average as well, still a bit higher than where we were. One of the things that I thought was pretty interesting last week, I was thinking, my thought going into FOMC was that nobody really wanted to buy. It seemed like a buyer strike going into the FOMC last week. And, we didn't really get much new, information than what we already thought. We got the quarter of a percentage point rate hike, and they're signaling for two more, which is exactly what the expectations were. One thing that I noticed that I did not think was a good sign was that the VIX was dropping into the FOMC meeting. Normally what happens is the VIX will actually rise going into the meeting, and then once the meeting is over, then the VIX kind of collapses. We saw the opposite of that last week, and what that tells me is I think a lot of the shorts that were out there were actually covering Wednesday morning into the meeting, and I said this just is not right. And then what we saw after the Fed meeting on Wednesday was further selling, and then Thursday and Friday were just pretty ugly in general. So That just means, and the reason why I go over this, it just means that the bears or the sellers have control of this market right now, and we're going to have to see a little bit of confirmation of that, being over with right now. So, right now I think it's kind of a little bit of catching a falling knife. We certainly have the good, trying to give you the good as well with the bad. The bad is we just don't know how much further the sellers have to do in this market. And like I said, they've got control. The bears have control. So I think it's a little bit of a wait and see. The good news is you have a dip, and you have going back to the S&P. Everybody always wants a pullback until they get it, and everybody's too scared to actually do it, to actually go ahead and buy. I want to see a couple. What I'm watching for next week, at least in the beginning of the week, is for kind of the sellers to relinquish and the buyers. Just like I said, that there was a little bit of a buyer streak in the beginning of the week going into the FOMC meeting. We didn't see any major buying going on both in options or in really in any other place in terms of overall equities. So that's got to happen. The buyers, the institutional funds have to feel a little bit more comfortable. I said, towards the end of last week, I said, while we're going down, I said, I'm waiting. I'm kind of sitting on my hands, and I don't want to be the first buyer that comes back in. I want to be in after I know that the buyers, the big institutional funds have resumed buying instead of selling. So that's kind of what I'm looking for in the beginning of next week. One of the things one sector that I watch a lot is biotech. I think that's always a good sector for kind of risk on. Usually, the biotechs actually, believe it or not, are one of the first groups to kind of rebound a little bit. They're a little bit away from everything. They're not straight industrials. They're not. It's not exactly technology. So that's one group that I've seen before that starts to rally before anything else. All right, so that's just a little bit of strategy for next week. The roadmap is always the same for me. I'm always looking for the institutional buyers at least to take some shots in the options market, and we just didn't really see that. It was very small. Order flow that we saw for the most part, just a little bit here and there, and then once the volatility really starts to pick up, we just don't see a ton of buying whatsoever. And you can see the VIX right now, we're close to where we were back in the beginning of the month. Notice that we're not even close to where we were back in the beginning of February. So I don't think that means all that much. I don't think we have to get to the highs in the VIX. There was certainly some other factors that were going on with those inverse volatility ETFs. But I think right now we have to see if the S&P is going to hold that 200-day moving average. It, of course, can drop below it and then close back above. But I'm not over anxious to. I do want to be there and buying the dip. But again, I just don't want to be that first buyer to come back in. So let me talk about a few other things that I notice. And again, I'm gonna stick with the negative. Copper breaking the 200-day moving average. That's not such a positive thing. Also, in some international equities. By the way, well, I'll go into the fund flows in just a minute, but take a look at some things like EZU. This is Europe, the Eurozone ETF, seeing a lot of outflows. That's been going on now for 3 weeks. And that also broke the 200-day moving average. So we are seeing some things already break the 200-day moving average. I know the S&P hasn't done it yet, and it stopped right there. But there's a lot of things, or there's a lot of particular countries that are already doing that. Look at India. This is the EPI ETF, already broke the 200-day moving average. We could go to Germany as well. The DAX is something that I've been watching it because I think it's a big trouble area right now. EWG, the Germany ETF, did break the 200-day moving average right here. So again, some of these things, perhaps the U.S. market could lead some of these back and kind of set the tone, but we're just going to have to, it's just going to have to be a wait and see. EWJ, the Japan ETF, that did not break the 200-day moving average. I would say emerging markets, I think, are a little bit stronger than ours. You can see they broke the 100-day moving average, but have not tested that 200-day yet. So again, we'll have to see how that goes and how Asia opens overnight. Just to give you some raw numbers, just to kind of tell you, and then we'll go into a few charts to watch for next week. But let's see, where do I want to go first? Let me go through the ETF fund flows just to give you an idea of the numbers. What were the biggest funds that saw the outflows last week? Really, the S&P funds. The IVV, which is a fund very similar to SPY, saw $10 billion of outflows, and SPY saw $9.8 billion dollars of outflows last week. So that tells you really what was happening in the sellers market. If you flip over to the inflows, what saw inflows last week? SHV was the biggest inflow of any ETF last week. What is that? That's short-term treasuries. So that's basically a cash equivalent. That increased the fund size by about 8% last week. REITs, utilities, gold. Those are your top inflows for last week. And I've got the raw numbers behind the Europe. The TTG subscribers will get the raw numbers for how much European outflows there have been in the last few weeks, as well as sector-wise as well. But yeah, pretty just kind of goes with that theme of total risk off. So now I want to talk a little bit about the positive. So this is the S&P sector scorecard, much different than what we've seen probably in about 2 years, I would say. We are now seeing a lot of the sectors fall below the 200-day moving average. You've got 1, 2, 3, 4, 5, 6, 7 different sectors that are now below the 200-day move, the 50, the 100, and the 200-day moving average. And you could see tech is now below the 50 and the 100-day moving average, which has been really held up pretty nicely. The one positive I would take away from this is it's gotten pretty ugly across the board. And I think if we do get some positive news next week, we could actually see a squeeze higher. Look at the momentum rating that I have. Noticed that the highest rating is a +12, the lowest rating is a -12. Notice how many of these are very close to the worst rating that you could possibly have. And what I've seen over the years with this momentum indicator that I use is that they don't usually stay either at the highs or at the lows for that long. So you've got four of the leading sectors right now with either a -11 or -12 rating. That tells me that we probably have a bounce coming pretty soon. I would think. And then if you look over to sentiment, you can look at the Fear and Greed Index, which I know a lot of people are talking about. It's at a 7 right now. It's a rank of a 0 to 100. So it could go a little bit lower. It could go down to 0. But I think we're getting to the point where we will at least, I don't know if it's going to be a sustained bounce, but I would think you're getting to the point where we've gone all the way to the one end of the spectrum in terms of bearishness. So could be a big washout on Monday, and then possibly those buyers will come back in. Other events that you have to watch for this week, we've got a lot of treasury auctions that are going on this week. Let me just lower my volume here. Sorry, I am on my laptop this weekend, so this video is a little bit annoying because you will hear me typing on it. So you've got that going on. You've got, so I think that'll be interesting for the week. If we look at let me just switch this to government auctions. We'll have to see how these go. We've got the short-term auctions, the 3-month, 6-month, 2-year. We've got the 5-year as well next week. Friday is a holiday, so markets are off Friday. We'll have to see, as well as we'll have quarter end, and we'll see what we get with quarter end as well, which I believe is on Friday. So we'll have to see what funds do with that as well. So a number of things to watch. On the positive side, if we go back to the economics, one thing that came out that I think was overshadowed last week was the durable goods last week. We are still seeing, and actually let me go all the way back to 315, a couple things that have been coming out that have been positive. The housing data last week was not all that bad. If I could find the small business sentiment, which I'm not sure I went back far enough there, but is still there's still a lot of positives that I see. Maybe I have to go back to, here we go. Yeah, I mean, this came out on 313, so, a couple weeks back, but small business optimism is, at a record high. So that's not very bearish. A couple other things that came out, inflation was not that high. And then last week we had durable goods that beat expectations. And 3.1 versus 1.6. So so everything is not completely negative. So I think you just have to be a little bit, I know I use this word a lot, but I think you have to be a little bit patient with what's going on. Let this selling pressure wash its way out. I mean, what did Thursday and Friday, I hit a lot of stops. What I did was I ratcheted a lot of stops in my Tribeca Trade Group portfolio, cash trend portfolio. This way I have cash available so that when buyers come in, I'm basically ready to go. And you always want to have that cash to be available to you when you're ready to deploy. A couple areas that I think are interesting as well is commodities. This is DBC. We saw a call buyer in DBC last week. Again, I'm only on one screen here because I'm on my laptop, so just bear with me. But we saw a nice sizable order in this DBC. This is it's multiple commodities, and you can, whenever you're not sure about a fund, you could always go to their website. And if you go to the power shares, you could see this DBC ETF. You've got crude, WTI crude, Brent crude, gasoline. You got gold in here as well. Those are your top weights, and it looks pretty strong. And if you look at this in terms of, also commodities versus, which I can bring up here, commodities versus equities. I just did this versus the S&P. But you could see that commodities may be looking to break out here versus equities too. You could see that they've been in this base now above the 200-day moving average and rallying pretty hard. So I think if you leave your mind open to some other possibilities and maybe things that you haven't gotten into in a while, I think oil looks pretty interesting if we look at those individual charts. Crude is trying to break out of that 65 area, so these energy stocks haven't done a thing. Maybe this gets above XOP, which is your equally weighted oil, gas, and explorers ETF, above the 50-day moving average, or needs to get above the 50-day moving average for me for a long. I think XLE also looks interesting, but it's got to get above the 200-day moving average. And with oil going higher, I would think these would benefit once the selling pressure subsides a little bit. Also gold, gold is just above. You can see I've got a downward trend line drawn. A lot of money has been going into gold the last 2 weeks. If we go back to my newsletter, and if we go to the fund flow section, which I just didn't cover this, but you could see for the last 2 weeks, last week it was $447 million went into GLD. The week before that, it was $275 million. IAU, which is another just straight gold fund, saw $186 million last week. So 2 weeks, for the last 2 weeks, both GLD and IAU are both seeing inflows. So, this has been a really tough trade this year. It's a lot of sideways chop. I am not in gold at all, but I would be looking for maybe a break above at least this downward trend line. If we zoom in a little bit closer, you could see that there's an MACD crossover as well. So maybe around, I was going to say 1370, but maybe around 1360 for a move in gold. Also, one of the observations last week is Trump sounds like he's increasing defense spending. A couple of these charts look pretty interesting as well. Look at Raytheon. Raytheon was very strong on Friday, but of course got sucked up into the selling pressure with everything. Watch for an MACD crossover. Notice it's curling around here. Hasn't had it yet, so I don't own any positions in here. I'm mainly sitting on my hands right now. in a lot of cash and looking to kind of redeploy. But I think Raytheon looks pretty interesting. And if you get a move back above this value area, which is, I would call it 215, I think that sets up nicely for a long. I looked at the ITA ETF, which is the aerospace and defense ETF. It doesn't look as strong. I actually like, sometimes I prefer the ETF over the individual names. In this sense, I prefer the individual names over the ETF, because I think RTN NOC has a similar looking tail there, but maybe watch for a break above the value area. Also, similarly, watch for a break for an MACD crossover. And then also LMT also looks interesting too. This one's a little bit different looking than NOC and RTN. Watch for a move in this one inside value, inside the March value area and above the 50-day moving average. All right, and then the last thing I'll leave with, maybe not the last thing, but I put together an index. No one else has an index like this. There's no ETF out there for enterprise software or application software. I call this my business technology index. Take a look at this. This has been one of the strongest groups of stocks in the last few months. And clearly you could see the trend is actually a really nice looking trend. It's into the 50-day moving average. In February, it broke the 100-day. This is a really nice group of stocks that I put together. It's about 45 different names. You could see some of the names in the index. You've got your GoDaddy in here. You've got your VMware. You've got Vive, Palo Alto. All names, as I was talking about the business sentiment being very strong. This is a group that I think I would want to explore a little bit more. So this is what I'll be going over in the beginning of the week. Once buyers come back in, I'll be going over a bunch of charts in this group. Also, names like Adobe are in here. Splunk is in here. Salesforce is in here. So, this has been an extremely strong group. So I'm not going to go over all these charts right now. A lot of them are going to look a little bit similar from what we saw Thursday and Friday. So we'll be doing that in the beginning of the week. So let's see, how did futures open up? Well, not that bad to start off. Looks like we opened up essentially flat. All right, so that's the game plan for Monday. Again, if there's no institutional buying that comes in, no strong buying, and I want to see that buying, as they say, with two hands, right? I want to see some big order flow in the first part of the day, and then also on Monday morning, you have to watch that 11 o'clock hour. I think just about every day except for the Fed day last week, that 11 to 12 o'clock hour is really when the sellers have taken control. So if you're really good at scalping, and this is a good point to make, if you're really good at scalping, this is a great market for you. And you don't even have to do it in individual names. In the indices, as long as you can get in and out very quickly, there's a lot of money to be made with scalping, S&P or the Qs or even small cap futures. So you can see futures are starting to rally a little bit. But again, I'm not going to really add a lot of risk Monday morning until we see those buyers come back in and a couple of the other points that I mentioned for the week. All right, so thanks for watching the video and enjoy the rest of your Sunday night, and I'll see you in the trading room bright and early Monday morning. Thanks everybody, have a great night.